What if a cryptocurrency is trading at an almost microscopic price, has a fascinating synthetic asset concept behind it, yet barely has enough market activity for traders to establish a reliable value? Is SORA Synthetics or XST one of those forgotten crypto projects that could be massively undervalued? Or is the extremely low price actually a warning that the market has already moved on? That is the big question surrounding XST, and this is not a simple story. Because SORA Synthetics is built around an ambitious idea, creating synthetic assets on the SORA network that can represent the value of real world or digital assets through on chain mechanisms. The concept sounds impressive, but the current market situation is extremely different from the vision. So, today we're going to look at what XST actually does, why some traders might see opportunity here, why others would consider it a serious value trap, and what would have to happen for this project to become relevant again. Before we get into it, make sure you like the video, subscribe to the channel, and most importantly, leave a comment below. I want to know what you think about XST. Is SORA Synthetics a hidden gem that the market has completely forgotten? Or is this a token where the low price is actually telling us something important? And as always, this is crypto market discussion, not financial advice. So, what exactly is SORA Synthetics? SORA Synthetics is a synthetic asset platform connected to the SORA ecosystem. The idea is to create tokens whose value is linked to an external reference, such as a currency, commodity, or another financial asset. The XST token itself acts as the platform and collateral asset supporting SORA's synthetic assets. One of the first major examples is XST USD, a synthetic asset designed to track the value of the US dollar. And that is where the project becomes interesting, because the goal is not simply to create another cryptocurrency. The broader vision is to make different forms of value available through blockchain-based synthetic assets. Imagine being able to gain exposure to currencies, commodities, or even other financial instruments without needing the traditional infrastructure normally associated with those markets. That is the promise of synthetic assets. But there is an enormous difference between having a good idea and building an ecosystem that people actually use. And that is where XST faces its biggest challenge. The current market footprint is extremely small. There appears to be very limited trading activity, limited liquidity, and relatively little market attention compared with major crypto projects. That immediately changes how we should analyze this token. Normally, when we talk about a cryptocurrency being undervalued, we're looking at things like market capitalization, network activity, adoption, liquidity, developer activity, and growth. With XST, some of those measurements are extremely difficult to establish because the market itself is so thin. And that creates a very important distinction. A token can have an extremely low price without actually being undervalued. Price and value are not the same thing. If a token trades at many decimal places below $1, that doesn't automatically mean it has enormous upside. What matters is what the entire network is worth and whether people actually want to own the token. Now let's talk about the technical side. This is where XST becomes very unusual. There isn't enough reliable and consistent trading activity to confidently establish the kind of traditional support and resistance levels you would normally use for a highly liquid cryptocurrency. When liquidity is extremely low, traditional technical analysis becomes much less reliable. You could see a huge percentage move and assume momentum has suddenly turned bullish. But if that move happened on almost no liquidity, it may not represent genuine market demand. A single relatively small transaction can potentially move the displayed price dramatically in a thin market. And this is one of the biggest traps with micro-cap cryptocurrencies. A price can suddenly appear to be exploding, but if there are almost no buyers behind that move, the apparent gain may be extremely difficult to realize. So instead of asking whether XST has broken resistance, the more important question may be, has meaningful liquidity returned? Because if liquidity doesn't return, technical signals don't mean much. Now let's talk about ratings and signals. There isn't a meaningful traditional analyst consensus for XST. You won't find a large group of professional analysts publishing dependable buy, hold, or strong sell targets for a token with this level of market activity. And that itself tells us something. The market is not currently treating SORA Synthetics like a major, actively followed cryptocurrency. The available signals are instead centered around extremely low liquidity, limited market data, and uncertain adoption. So, if we were forced to describe the current situation with a simple rating, it would not be strong buy, it would be closer to high uncertainty. Because the biggest problem is not simply that the price has fallen, the biggest problem is that there may not be enough reliable market activity to establish what XST is actually worth today. Now let's get into the biggest question. Is XST undervalued? The bullish argument is actually quite interesting. SORA Synthetics is built around a concept that has real potential. Synthetic assets are one of the more powerful ideas in decentralized finance because they can potentially connect blockchain-based markets with assets that exist outside the blockchain. SORA's broader vision includes synthetic assets linked to things such as currencies, commodities, and other financial instruments. If that vision eventually becomes widely adopted, the potential market is enormous. Think about the global financial system: currencies, gold, stocks, commodities, indexes. All of these represent enormous amounts of economic value. If blockchain networks can eventually provide efficient, permissionless ways to represent some of that value on chain, synthetic asset infrastructure could become extremely important. And if SORA becomes a serious player in that sector, today's tiny valuation could look very different in the future. That is the bull case. But now, let's look at the other side. What if the market isn't overlooking XST? What if the market is correctly pricing in the lack of adoption? That is the bear argument. Because having a synthetic asset mechanism does not automatically mean users will come. There are already major DeFi ecosystems competing for developers, liquidity, and users. Ethereum has an enormous advantage in liquidity and adoption. Other layer 1 networks have developed their own DeFi ecosystems, and specialized protocols already offer synthetic exposure to various assets. So SORA is not entering an empty market, it is entering a highly competitive one, and competition is one of the biggest risks for XST. Another issue is liquidity. Synthetic asset systems ultimately depend on functioning markets, reliable oracles, proper incentives, and sufficient economic activity. The system has to work not only when everything is calm, but also when users panic. That is when decentralized financial mechanisms are truly tested. And then there is another risk. The market data itself can be confusing. Different platforms may show different information about XST depending on the network, contract, or token representation being tracked. That means traders need to know exactly which XST they're talking about before making assumptions about market capitalization, supply, or price. And this is another area where retail traders can get trapped. They see a tiny price, they see an old all-time high, then they calculate what would happen if the token returned to that level. Suddenly, the potential gain looks enormous. But that calculation can be dangerously misleading. A previous all-time high does not create a future price target. The market conditions that existed when the token reached that price may never return. And if liquidity has disappeared, even a theoretical return to a previous price doesn't mean there would be enough buyers and sellers to support that valuation. Now, let's look at the bull case more seriously. The best possible scenario for XST would be a genuine revival of the SORA ecosystem. Developers return, liquidity increases, SORA-based applications become more active. Synthetic assets gain real usage. New synthetic assets are introduced. Oracle infrastructure improves. And users begin interacting with these products on a meaningful scale. If that happens, XST could potentially become much more interesting. The token would no longer be just a forgotten microcap asset. It could become a core component of a functioning synthetic asset economy. And because the current market footprint is so small, even relatively modest growth in demand could potentially have a major effect on valuation. But now let's consider the bear case. What if adoption never arrives? What if liquidity remains extremely low? What if synthetic assets remain a niche product? What if developers move toward competing ecosystems? And what if the broader SORA ecosystem fails to attract enough users? In that situation, XST could remain stuck in a low activity environment for a very long time. And that's an important distinction. The worst outcome isn't necessarily a dramatic crash. The token is already trading at an extremely small value. The bigger risk could be stagnation, no liquidity, no users, no meaningful volume, no major development, no catalyst, and eventually almost nobody pays attention anymore. That is the kind of environment where retail traders can become trapped. They buy because the token looks cheap. Then they discover that selling is much harder than buying. That's why liquidity should always be considered before potential upside. Now let's talk about the short-term outlook. For XST, I would describe the short-term outlook as extremely speculative and uncertain. There is not enough reliable market activity to confidently say that buyers or sellers have established a sustainable trend. A genuine bullish signal would not simply be a sudden percentage increase. It would be sustained volume, more liquidity, more active markets, more holders, more development, and evidence that the synthetic asset ecosystem is actually growing. Until those things happen, any sudden price movement should be treated very carefully. For the long term, however, the story is much more interesting. The underlying concept of synthetic assets is not dead. In fact, it could become increasingly important as blockchain networks connect with traditional financial markets. The question is whether SORA Synthetics can capture a meaningful part of that opportunity, because the market doesn't reward ideas forever. Eventually, ideas need users, they need liquidity, they need developers, they need economic activity, and they need a reason for people to hold the underlying token. So where does that leave XST? The bullish argument says this is an extremely small project operating in a potentially enormous sector. Synthetic assets could become a major part of decentralized finance. SORA has a distinctive architecture, and if the ecosystem experiences a genuine revival, XST could theoretically have significant upside from its current tiny market footprint. The bearish argument says the market is already telling us something. Trading activity is extremely limited, market data can be inconsistent, liquidity is tiny, and there is not enough evidence of large scale adoption to justify a confident valuation. So maybe XST isn't undervalued, maybe it's simply illiquid, and those two things are completely different. An undervalued asset has a market that hasn't fully recognized its potential. An illiquid asset has a market that may barely exist. The challenge is figuring out which one we're dealing with. And that is what makes SORA Synthetics such an interesting but dangerous cryptocurrency to discuss. There is a real idea here, there is a real synthetic asset framework, there is a potentially massive future market, but the current market footprint is extremely small. So the next major catalyst would have to be more than just price. We would need to see activity, we would need to see adoption, we would need to see liquidity, we would need to see developers building, and most importantly, we would need to see users actually using SORA synthetic assets. If that happens, the market could eventually start looking at XST very differently. But if it doesn't happen, the token could remain one of those fascinating crypto experiments that never achieves the scale its original vision promised. So is SORA Synthetics a forgotten opportunity sitting almost completely outside the market's attention, or is the tiny price actually the clearest warning sign of all? Could a revival of SORA's synthetic asset ecosystem turn XST into one of those unexpected crypto comeback stories? Or will the lack of liquidity and adoption keep this token trapped in obscurity? Right now, nobody knows for sure. And perhaps the most important question isn't where XST goes next, but whether the market will still be paying attention when the next big move finally arrives.